Welcome back. You're watching the Small and Mid Cap show. Well, Jindal Stainless is also in focus. It came out with its Q1 FY25 results. Revenue was down around 7.4%. EBITDA was up 1.6%. Margins have improved a tad bit, and net profit was down around 12%. But to discuss more about how the company quarter gone by and how FY25 is shaping up, we're joined by Mr. Anurag Mantri, ED and Group CFO of Jindal Stainless. Welcome to the show, sir. I want to understand that what is your assessment of Q1 FY25, and what is the kind of outlook that you'll give for overall FY25, especially for your EBITDA for ton guidance?
So if you see Q1 results, we have done the highest ever sales in terms of the volumes in Q1, so which is a good sign, and this is despite the challenges in the global market and especially the export market, because our export mix in this quarter was also still lower at 10%. So despite that, because we continue to tap a momentum in the domestic market and especially the newer sector which we cater in the stainless steel sector, which continue to grow up the demand of the volume, our volumes. So I think, and especially an EBITDA per ton, if you see, we have seen a sequential improvement in the sequential basis. So we are seeing overall a good positive sign, and our guidance for the year, therefore, it gives a confidence of us that we should be able to achieve a guidance of around 20% of the volume growth in this financial year. And the EBITDA is should be around 18 to 20,000, but depending, obviously, a lot will depend on this guidance is the how the export market shapes up in H2. Also, the domestic industry is currently under pressure from the lot of imports coming from China, and which has to be addressed at a faster pace, because we are seeing the all-time high imports coming from China at this stage. And last time in the DGTR, when DGTR did an investigation, there was finding that 18 to 22% has been a non-WTO subsidies which has been provided by Chinese government to the Chinese manufacturer. We our long-standing demand is that it should be addressed, because otherwise, especially the MSME manufacturers are right now actually really struggling. And in any country, to grow develop the manufacturing ecosystem, it is necessary that entire, right from the bigger player to MSME player, also thrives in that market. So with that, I think that also need to be addressed. If all those export market and the Chinese imports pressure, depending on that, we still maintain our guidance. We said, okay, that 20% should be achievable, but it will all depend on these two factors also.
Right, Mr. Mantri. This is Mika Barve this side. You mentioned, demand in the domestic market, being under pressure, with China's imports. But are there still some pockets of growth that the company is seeing? And if yes, from which sectors? I mean, you all cater to various industries like auto, railways, construction. So which sectors would be driving the demand and growth going forward?
So right now, last quarter we have seen a good uptick in the demand, which continue to remain strong in railways, automobile, pipe and tube, certain valuable pipe and tube segments, as well as lifts and elevator segment. These demands continue to remain domestic demand remain to be strong. The newer sectors which we cater, because at Jindal Stainless, we are at the forefront of the very high quality products and of the stainless steel. So the newer sector like hydrogen, ethanol, all these should also, the kind of traction which we are getting should continue to cater volumes for us in the future. But right now, railway, auto, PNT, lifts and elevator, they are actually showing a good demand traction.
Got it, Mr. Mantri. And I also want to talk about the latest approved 5,000 crore fundraise. If you could just give us some details. And, companies mentioned that this is for the expansion plans. So how would it be allocated for, the expansion plans that the company does have in place right now?
See, this is an enabling resolution to prepare ourselves for the future growth of the company. I think if you see, as I mentioned, that the domestic demand in stainless steel industry continues to remain robust, and we need to continue to maintain our leadership position and consolidate our positions in the domestic market to tap that. Right? So we are getting this enabling resolution which board has approved for us to tap the organic and inorganic opportunities whenever it comes. So we will according, because we want, the two thing is very key for us. One is that prudent capital allocation. We want to maintain a very healthy ratios. And considering we also want to keep consolidating the position in the for the stainless steel sector, and especially the export market and the domestic market, both side. So continue to grow more and make in India efforts of that. So with that, I think to tap these two things, it's a more enabling resolution at this stage, and we'll see that how the opportunities unfolds for us.
Mr. Mantri, and to end this, I want to ask lastly on the the timelines for your two main expansion plans. One is the expansion of the downstream lines, and one is the upgradation of the infrastructure facilities. When would we see the full effect of these expansion plans coming into place?
All the expansion plans which we have announced, I think will be, which we have currently announced, will be up and running in next 2 to 3 years. So because these include the melt shop of the Indonesia, the downstream. So it's actually combination and balancing facilities also. So the timings have been that within 2 to 3 years, all these expansions should come on the stream.
Right. Well, Mr. Mantri, thank you so much for giving us those insights on your company, and all the best for FY25. And thank you so much for taking our time and speaking with us at NDTV Profit. But with that, we'll shift focus to Sapphire Foods. Sapphire Foods also came out with its Q1 FY25 numbers, where revenue was up 10%. EBITDA was up around 2.3%. However, margins have taken a hit from 18.6% down to 17.3%, and net profit is down around 67%. So to discuss more about how quarter has gone by, we are joined by Mr. Sanjay Purohit, whole-time director and group CEO of Sapphire Foods India. Welcome to the show, Mr. Purohit. My first question to you is that your revenues have grown 10%. However, your margins and net profit have taken a hit. So give us some color as to why that has happened.
So thank you for having me on the show, Mahima. Firstly, overall consumer demand sentiment continues to remain subdued, as we've seen over the last perhaps 4-6 quarters. And within that subdued demand, I think we've had a steady performance on KFC, and I'll give a little more nuance in a minute. And we have seen an uptick in performance on Pizza Hut and Sri Lanka. On KFC in April, because of the shift of Navratra days, where a non-veg is eschewed by a large section of people, and we see a drop in KFC sales. Navratra was entirely in April this time versus last year in May, and therefore April from a same-store sales growth perspective on KFC was muted. May and June was all right, and as we are getting into Q2 also, we are seeing a similar trend. However, because of operating deleverage, largely because of that Navratra impact, you're seeing slight erosion in margin on KFC. So it came down to 18.8%, which is still perhaps the best in the industry. On Pizza Hut, we've had an uptick in performance. We've had about 5-6 quarters of declining ADS trends. But this quarter, on the back of intervention on product innovation, we launched Melts, which is an outstanding product, backed it up with television advertising. We've seen an uptick in performance. And our Sri Lanka business also now has started to rebound, a double-digit same-store sales growth. So overall steady, but because of operating deleverage and Pizza Hut year-on-year being lower, though on sequential basis being a little better, we've seen this margin erosion.
Understood, Mr. Purohit. I also want to understand that I was seeing your channel contribution, and on a year-on-year basis, the contribution from delivery and takeaway is increasing as compared to dine-ins. So I want to understand that what is your strategy going forward? What is the kind of store expansion are you looking at? Or will you be cutting down your guidance for store expansion because delivery and takeaway are just simply increasing?
So two parts to the question. What is happening on the channel part? And I'll explain that. There is a marginally gradual shift, if I could say so, from dine-in to delivery that indeed we are seeing. So that is in our hitherto operating hours of, say, 11 to 11. Over the last year, however, in most of our stores, we have increased our operating hours, and today we are open in some stores till 2 o'clock, in some stores even right up to 3 to 4 o'clock in the morning. Now that slot is almost entirely delivery. There's no dine-in sales there. And hence that channel or that day part coming into the picture has skewed the delivery proportions a little bit. Apart from that, we've seen just a very gradual or marginal shift in the dine-in versus delivery proportions.
Right.
Having said that, from a store expansion perspective, we had called out that we are on track to double KFC store count by the end of December 24. So December 21, whatever we were, we should be able to double it by the end of the year. On Pizza Hut, we continue to be very cautious.
Right.
In the first 6 months, we've opened just one store.
Right.
I don't think the next 6 months it will be at that low pace. It will be slightly better than that. And in Sri Lanka also, I think till the economy fully bounces back, we're going to be cautious.
Got it. And, with respect to your same-store sales growth, like you rightly mentioned, it's a double-digit growth for the Sri Lanka business. However, Pizza Hut and KFC same-store sales growth have been, under pressure since the past few quarters. So when do you expect recovery there?
So, first of all, we are doing all that we can to improve trajectory on the business. On KFC, we launched the International Zinger Festival. Right now, the rolls range improves our snacking options that we've got, to offer consumers. We've pushed lunch in a significant manner. The late night occasion is something that we are pushing. So we're doing all that we can. And we've got to still remember that there is a subdued consumer demand environment that we are operating in. I think Q2 should still continue in the same vein, and I believe that towards the end of the calendar year, we should start seeing an improvement. On Pizza Hut, sequentially there is an improvement, but perhaps it will take another 2-3 quarters for us to translate that into same-store sales growth.
Right. Got it, Mr. Purohit. Well, thank you so much for taking our time and speaking with us at NDTV Profit. We look forward to a longer chat in the near future. But with that, it's time to wrap the small and mid-cap show. But remember, India Bulls Housing Finance Limited is now Samman Capital Limited. Jio Samman se, and keep watching NDTV Profit.